Hello everyone. Today I'm gonna evaluate the opportunity by using the information provided in the selected project for phase in the company life cycle. So you can see that here I already do a couple of the run here, and you can say this one have the largest firm value. So I will start a new one. Analyze first. Oh, wait, back here first. We need to know about a little bit about the company, what that we're gonna do today. So we know that the business is working capital intensive and the margin are generally thin. Several times during the past few years, the company struggled to finance the payroll, given the phone constant cash position. And more than one, the company line of credit was overdrawn. So N.C. keep a minimum amount of cash on hand to meet operational need, and this level of requirement cash is $300,000. So I am responsible for deciding whether to invest in a very upgrowth and cash flow improvement opportunity during 3 phase. Okay, we're gonna play it now. So the simulation is pre-populated with the historical data for the fiscal year from 2010 to 2012. This is the history. It will help me to understand the current financial position of N.C. We can see here we have total value of $3,248,000. So take a look at here. This is like the sale, the annual sale, the annual free cash flow, the annual cumulative free cash flow. This is annual net income, the annual EBIT, the available credit, and the total current asset. Let's take a look at the balance sheet. On the balances, you can review my firm assets and liability. This is the firm asset, like $300,000, and this total liability in 3 years. Next, we have take a look at the income statement. We got quite of the straight line here from 2010 to 2012. It's $10,000, and the cost of sale here is pretty flat. It's pretty the same throughout the year. So the EBIT so the EBIT here, it have changed from 2010, 2011, and 2012. Okay, take it. The next income is decreased in 2011, but it's growing really fast in 2012. The cash flow statement, we see the problem in credit line. You know, the company have struggled to the financial payroll. So see this cash cycle here. Okay, this time is the decide. So it's basically I would have choose the foreign debit plus free equity option because it have the equity dilution, which is also known as the stock dilution, 20%. The interest the interest rate is not as high as the ANT option. But we also loan more money from here, like 4,700. So I think this is the best option that we have, just in my opinion. So I'm so with this decision. Okay. So this is the thing that I need to consider to acquire a new customer. I would, in the first phase, I would like to accept as many opportunity that I would. So after looking over all these options, I think they are good option. So I would accept all of these because I personally think it's really good for the company. For all the best option, we can see the result in here. So the sale is increased, the EBIT is increased, the next income is increased. The cash flow is first decreased in 2013, but then it start to increase. So the value we create here is $496,000. But the problem we have is like the credit line is a little bit decreased, but I think it's okay. Look at the balance sheet. We can see the total current assets already increase in this phase, which is a really good sign. And next we look at the income statement. Still, I think I did good at the first option that we have here. So let's move to the next phase. The next one, still the same as the other one. I already look at the option to pursue a big board distribution. I spend online scene and develop a private label product. I personally really like this one. But take a look at the option. They still a really good option for us to choose. We need to consider the advantage and disadvantage of the opportunity. But in general, I see we have more advantage than disadvantage to the opportunity. So again, I will choose up the option and I will submit my decision here. And in this phase, we are really good in this phase. Like we have 974 total value created. You can see we raised the whole total value into $4,719,000. But the cash flows is decreased badly in 2019, and we need to look at why it decreased so fast in 2019, because I think we lack of cash, and it's been already the problem is sitting in this company. Of those already is showing us up the finger here, showing us really good. I believe I doing a really good job here. But again, the cash flow is decreased. This is my bad. We can look at why the cash flow is decreased. It's phase 2, right? So in here, this is why it decreased, like also a big bot distribution. It's impressed the top 5 growth, but the company EBIT margin is declined. So it's been a problem here. But again, in this phase, we did good. And we move next to the next one. So the supplier credit term is the good thing for us to increase the cash flow. So I will accept this one first. For two of those option, we should choose one of them. I would simply accept this one. The credit term is good for recover from the cash flow, but what I'm considering is the high risk customer. They will have us to grow too, but I think that it will decrease more cash flow in the future. That's why I decline this one, and we submit the decision. In this phase, we discuss too. The cash flow is better in two of those here. You see, we look at the cash flow here in phase 3. It's not that bad at the phase 2 because we brought in a solution for it with the renegotiated supplier credit term here. So as we see, we are done with this, and we can see the total that we do here. We have like 20,000 and 483,000 here. But the thing that we need to pay attention here, that the firm value that we create in this simulation here is 5,162, which is I think we'll see a high number because I can never go higher than this number in this simulation. Maybe someone can, but I think I have a good strategy in this capital simulation. And after this, I think that to be able to succeed in investing and accept opportunity, that we need to take a really good look in the opportunity, because each opportunity always have the advantage and disadvantage in it. So we need to see what the company need right now, and at that time, if the company lack of something, I need something really definitely like emergency of something, we need to take some opportunity to have with that right away. I think that's it for my working capital simulation. Thank you for listening.